Week of February 22nd, 2020. This one goes straight into the record books, with Dow falling at one point over 4,000 points for the week, with coronavirus fears just running over the investors, settling to be down 3,583 points lower for the week.
Hi guys, I'm Igor, and today I want to give you 10 high dividend stocks that can work well in any environment. These stocks actually had outperformed S&P 500 in the last 4 or 5 years. When coming up with the list of high-paying dividend stocks, you have to be very careful, because many of them are called high dividend for all the wrong reasons. I see a lot of people on YouTube and social media who recommend dividend stocks many times irresponsibly and without much thought of how they actually have performed in comparison to the overall market. In fact, many of those stocks have heavily underperformed, and you would have been much better off buying some S&P 500 index instead. But first, let me quickly recap the crazy week we just had. Hopefully, if you're watching this video 6 months, 1 year, 5 years from now, the Dow is pushing 50,000 and you're laughing your butt off at how fast people panicked and how great of an opportunity it was to get into the market. So for those of you watching it in 2025, consider it a great history lesson, and hopefully the dividend stocks I give you today will also work in the future. So we have a great video ahead of us. Strap to your seats, it's going to get good. And if you like this video, give me a thumbs up, subscribe to my channel, write me some comments. I'm always eager to hear from you. Let's start.
Oh boy, to say the week of February 22nd, 2020 was a bad week for the stock market is not to say anything. In fact, according to some estimates, $3.18 trillion in market value was wiped out from US stocks this week alone, as fears about widespread of coronavirus just ran over the market. In the beginning of January and February, when the first headlines about coronavirus started to come in, no one on Wall Street was paying particular attention to that. Moreover, the Dow and S&P 500 were making record closes weekly, if not daily. Then, when the reports about coronavirus spreading around the world started to come in, with big disease outbreaks in countries such as South Korea, Italy, Iran, and others, and finally the United States, people just panicked. Dow Jones Industrial Average plunged over 2,000 points in the first 3 days of the week. So on Wednesday night, February 26th, President Trump made a press conference where he tried to calm down everyone's fears, but the next day CDC, or Centers for Disease Control, reported the first community coronavirus case in the United States. Community case means that the person who got the virus didn't travel internationally or came in close contact with anyone who had it. On top of that, after CDC came out and said that they're watching as many as 8,200 potential, not real, potential coronavirus cases in California, all hell broke loose. The selling on stock market pretty much continued into Friday until Fed's chief Jerome Powell then came out and said that Fed will act appropriately. Who knows what that means, but the market is pretty much pricing in a 50 basis point cut at this point from Federal Reserve during their March meeting.
So what does this all mean and where are we going from here? Sooner or later, we're going to get some kind of a bounce from these levels because the market is extremely oversold. However, we're not completely out of the woods yet. So if we do get a bounce, it would not be a bad idea to sell some of your more risky positions, especially stocks that deal with travel, China, hotels, and big international exposure in general.
To view and analyze my dividend stocks, I'm going to use stockcharts.com. I highly recommend them because they give you charts already recalculated for dividends, so you can get a true picture of stock performance, dividends included. And I will compare these stocks to S&P 500 performance in the last 4 years. So the first stock, and probably one of my favorite stocks, MFA Financial, stock symbol MFA. The company operates as a real estate investment trust, or REIT, and invests in residential mortgage loans, mortgage-backed securities, and assets. MFA pays shareholders almost 11% interest or yield on its shares. Let me tell you guys, even for the REIT, this is very high. MFA Financial is one of the few companies in the mortgage-backed securities business that successfully survived the 2008 financial crisis because they invest in high-quality residential loans rather than high-return but high-risk secondary loans. It has been consistently paying this kind of high-yield dividend since 2008. My second stock on the list is Apollo Global Management, stock symbol APO. Apollo Global Management is an American private equity firm founded in 1990 by one of my favorite investors and bankers on Wall Street. His name is Leon Black. The firm launches and manages hedge funds for its clients. It also manages real estate funds and private equity funds for its clients and many other things. Leon Black set his firm, Apollo Global Management, which built its reputation on investments made in aftermath of 2008 financial crisis, was ready to deploy funds in the event of a global recession. A downturn would not be a bad thing for Apollo, he said during a recent panel discussion. Apollo, which manages over $300 billion in assets, invested almost $50 billion in 4 months around the time of 2008 financial crisis, and was prepared for a similar splurge should there be another downturn, he said. As you can see from the chart, the stock beat out S&P 500 handedly in the last 4 to 5 years. Apollo Global Management has increased its dividend for 4 years and presently yields 8.41%, which is well above average. I think it's a great place to park your money during these wild times, and it could be a great long-term investment as well. Third company is Iron Mountain, stock symbol IRM. As you can see from the chart, this stock did not outperform S&P 500, but I think it can fully do so in the next 3 to 5 years. This company is the global leader for storage and information management services, and still in the early phases of becoming a major player in cloud computing. They just unveiled new Iron Cloud storage service and acquired 4 large data centers to help build out its expanding cloud services and lucrative colocation facility market. This stock is yielding 7.93% and could be a very nice growth and high dividend opportunity for the long-term investors. Okay, next company is Gaming and Leisure Properties, stock symbol GLPI. Look at this chart, guys. It's a thing of beauty. Significantly outperforms S&P 500. This company owns and leases out their facilities to casino operators such as Penn National Gaming, Casino Queen, Eldorado Resorts, and Boyd Gaming Corporation. But only, and I emphasize, only in the United States. So there is no international exposure for those of you who are scared of coronavirus effect on the business. On the conference call, management emphasized that their properties are 100% occupied today, and they expect them to stay occupied 10 years from today and 20 years from today. They also made a point that regional gaming has revenue that is more stable than Las Vegas Strip revenue, and I think the market is just beginning to appreciate that. The stock pays 6.8% dividend, and a very good pickup in my opinion. The fifth company on my list is Omega Healthcare Investors, stock symbol OHI. Another great chart outperforming S&P 500. Omega Healthcare Investors is a triple net equity real estate investment trust, or REIT, which invests primarily in skilled nursing and assisted living facilities. They do business primarily in the US and UK. As you know, the population around the world, and especially baby boomers, are getting older, so we'll need more and more of these facilities, and soon. This stock pays 6.42% dividend, and I consider it a great pickup here. Sixth stock is On2 Brands, stock symbol KTB. This company is a little bit of an unknown because it came public only in May of 2019. So I can't really compare it to the S&P 500. This company designs, manufactures, and distributes apparel under the Wrangler and Lee brands in the United States and internationally. You've probably seen their jeans in stores almost in every department store. The company seems focused on delivering 8% to 10% total shareholder returns annually. This is a mixture of dividend yield and unrealized capital gains on the stock price. Right now it pays 6.31% yield dividend. And because of the short history, I would suggest just to monitor it for now, but it could turn out to be a great value here and high dividend play in the future. Next company on my list is National Healthcare Investors, stock symbol NHI. It slightly outperforms S&P 500 in the last 4 years. Company just reported earnings on February 19th, beating consensus estimates and boosting their quarterly dividend by 5% to $1.10 per common share. It pays 5.26% dividend, and I expect them to increase this dividend in the future. Similar to Omega Healthcare Partners, it's a real estate investment trust, or REIT, which invests in senior housing and memory care communities, entrance fee retirement communities, skilled nurses facilities, and so on. Like I said, with aging population and baby boomers retiring in the next 20 years, it's a very solid pickup. Next company is Innovative Industrial Properties, stock symbol IIPR. The first and only real estate company on the New York Stock Exchange focused on the regulated U.S. cannabis industry. In other words, it leases their property to state licensed operators for their regulated medical use of cannabis. This stock doesn't have a long history, but look at this chart, guys. Spectacular. From IPO price of about $20 back in December of 2016 all the way here at almost $91.94. What a run. It pays a solid 4.21% dividend, so those of you looking for exposure in medical use of marijuana, consider this as a solid pickup. The next company is Medical Properties Trust, stock symbol MPW. This company has grown to become one of the world's largest owners of hospitals, with 399 facilities and more than 41,000 licensed beds in 8 countries and across 3 continents. The company invests in a niche market with over 80% of their gross assets being acute hospital facilities. MPW has a business model that is recession resistant due to their strong and reliable cash flows with an aging population. Stock pays 5.03% dividend yield. It had heavily outperformed S&P 500 in the last 4 years, and I think it will continue to outperform in the years to come. The next company is AT&T, stock symbol T. Everybody knows AT&T. The company provides telecommunication, media, and technology services worldwide. If you look at the chart and plot it against the S&P chart, it's obvious that it does not outperform S&P in the last 4 to 5 years. However, it's a very conservative play. Coronavirus or not, people will still use their phones, internet, and cable services. The telecoms giant's shares are likely going to rally further in light of upcoming nationwide 5G and HBO Max launches, along with its ongoing business transformation. Institutional investors actively bought AT&T shares in the last reporting cycle, and I think we should too. At current levels, it pays 5.82% yield. To me, it's a perfect hiding place from all the craziness related to the coronavirus fears, and a good pickup here.
I hope you liked this video, and if so, give me a thumbs up, subscribe to my channel, and write me some comments or suggestions. I'd love to hear from you. See you next time.